Thanks for listening to the BlockNation Crypto Podcast, the most entertaining podcast in all of crypto. I'm your host, Drew Griffin. In this show, I talk about how to handle the bull market. So the upcoming bull market is on the verge of being here. Millions and billions of dollars are going to flow into the crypto market. Prices are going to swing like crazy. And the question is, can you stomach it? Are you ready for the bull market? And are you going to have an exit strategy for when that price jumps up and becomes over-evaluated? Make sure you follow me on Twitter at Drew Griffin. Make sure you subscribe to my channel. Make sure you leave me your comments and feedbacks. If you got any questions, I want to hear from you. Thanks for listening. So the bull market is on the verge of being here, and some of the scariest things that most new investors are going to experience, and even seasoned investors, is can you handle the bull market? Okay, so this entire episode of the BlockNation Crypto Podcast, we're going to go over how to handle the bull market, what to expect, and how to have the right psychology so that you can make the most out of your money that you have invested. Okay, so we're very close on this bull market taking off. Bitcoin's been pushing up to about the 5,800. It'll be in the 6,000 range here shortly, and everything's going to take off. There's so many things building a perfect storm between the Bitcoin halving, institutional investors having access through investments accounts like Fidelity, TD Ameritrade, stuff like that. Retail investors about to be able to invest in Bitcoin through these same sort of financial services, and it's just going to pour in millions and billions. And it wouldn't surprise me, especially when that Bitcoin ETF rolls out, seeing trillions of dollars flow into the Bitcoin and crypto marketplace, okay? It's going to happen. It's just a matter of time. So all this stuff's building up to a perfect storm for a bull market to take off, and can you handle that? Are you ready to handle that? So some stuff we want to talk about in this episode is you have to expect volatility, okay? When Bitcoin reached its peak back in the winter of 2017, leading up to that moment, its price would swing like crazy. You would see days where the price of Bitcoin jumped and dropped over $6,000. We're talking about going from 12 grand to 18 grand, from 12 grand back down to 7 grand, jumping back and forth like crazy. Okay, and so as an investor, you have to be able to handle and expect this type of volatility. Okay, so some of this comes from having an investment philosophy. My philosophy is hold on to stuff for the long term. If I really believe it and really believe its value is going to increase over years and years, and then I can sit there and, I can handle massive price swings. Okay, maybe on a dip, I like to buy back in and get a little bit more bang for my buck. But you've got to expect crazy volatility. You've got to have the stomach for that. That's just the nature of cryptos, and especially once we see an influx of money, and a lot of these people who are used to investing in stocks really get swayed by little bitty market movements and little bitty pieces of news. Okay, Trump comes out, talks about imposing more tariffs on China. You see all the major stock indexes drop because of how fickle, investors are to news, and how reactive that the little tiniest piece of information can sway them. And this money is going to flow into crypto, and it's going to do the same thing. Because a lot of retail investors are going to put their money in. They're going to see that thing swing 20% one way in a single day, and they're going to panic. They're not going to like that. So you're going to see a lot of volatility in the market. Just expect it. You've got to have the stomach for that, because if you don't have the stomach for it, it's going to eat you alive. Okay, so there's a couple ways you can manage volatility. The first way, like I talked about, you need to develop a philosophy. My philosophy is long term. All right, I'm not going to sweat major price swings while I'm waiting out years and years to see a major return on my crypto investments. Okay, so I'm going to hold it out. Now, another thing you can do is quit checking the price every single second. Me personally, I can do that because it doesn't matter to me. Okay, the price of Bitcoin drops down to $1,000. I'm going to hold tight. I'm just going to keep buying more. I know a lot of people think that's crazy, but I believe in my long-term investments, and I'm not going to drop out just because I see a little bitty a price swing of that nature. Okay, so I'll sit there and I'll hold tight. I'll probably even buy more of it. All right, and same thing, if it doubles real quickly over a day, I'm not going to immediately sell. Okay, so me personally, I can sit there and I can check the price very often because I can stomach the volatility. Okay, I've been doing this for several years, and it doesn't scare me. Okay, other people can't do that, and that's okay if you can't do that. All right, for a long time with my stock portfolio, when I was investing in a lot of risky assets, I couldn't check the daily prices because I would freak out, especially as an early investor when I see that thing drop 10%. Okay, that happened to me a couple times where I invested, a couple weeks later, it's down 10% and I'm immediately selling, and then like a month later, it's up 5% or up 15%, up 5 from where I would have bought in at. And I just panicked. I was new to investing back in those early days. And so if you can't handle checking the price, then don't do it. Okay? Set your investment timeline, if it's a year, 2 years, 10 years, whatever, and just stick to that and have faith in that. Okay? Unless there's some sort of major market news and you just know, hey, I got to get out of my position. Okay? So if you can't handle checking the prices every single day, then don't look at it. Okay? Get off crypto Twitter. Quit checking your Blockfolio. Get off CoinMarketCap if you can't handle it. The next thing you need to do that's really going to help you out in this bull market is do your research, find what cryptos you really like, put your money into them, and leave it there. Okay? A major mistake we see investors doing, not just in cryptos, but in all different types of investments, they just keep jumping in and out of different investments, and that's okay if you're a day trader. Okay? If you're constantly trying to make profits off multiple trades every single day, that's okay. I'm talking about people who want to have some sort of long-term investment, but as soon as they don't like the news about one crypto, they jump to a different crypto. As soon as that goes up 10%, they take it out and move it to a different one. Okay, it's a well-known fact, and you can look at some of the best stock pickers throughout the history of the stock market. All right, the more moves you make, eventually, over an amount of time, it's going to start hurting you, even though you may catch fire for a little bit. If you keep on making move after move after move after move after move, eventually it's going to cause you to start losing money if it doesn't at the very beginning. So one way to avoid this is do really good research. Find what coins you really believe in, what you're really going to back, put your money in there, and sit it out for a while. And if you want to put in some sort of stop loss, let's say you can't stomach losing more than 25% from the crazy volatility that's about to come, put in a stop loss. Get out of that position. But like I said before, cryptos are volatile, and if you're constantly buying and selling, trying to find the perfect price, you're trying to find the perfect top price to sell at, right? You're going to be creating a lot of stress for yourself, and over a long run, odds are you're going to end up losing more money. And always remember, every time you make a trade, you're having to pay a small exchange fee, or you're having to pay some sort of gas fee, whatever it may be. So find what you really like, back it up, put your money where your mouth is, and sit on it for a while. Okay? Now, if you're a short-term investor or you're a day trader, you got your own strategy. But I'm talking about your average retail. Hey, I'm going to find something I like. I'm going to put my money into it, and hopefully, 6 months, a year, 2, 4, 5, 10 years down the road, it should be worthwhile, and I'm going to get my money out there. Okay, so park it, leave it there, and let it grow. Okay, let it grow. If you want to, maybe you buy it and you maybe consider rebalancing 6 months from now, a year from now, that's okay, but give it a chance. Okay, and like I said, don't panic just because that price swings, because this is what's going to happen inside the bull market. It's going to be volatility. All right, so do you have the guts for it? I have the guts for it. All right, I'm ready. I am excited, especially once that halving starts in. We see retail money from people who are already invested in crypto that can access it through Fidelity, TD Ameritrade. It's going to be a sweet time in crypto. All right, so another thing you got to get ready for during this next bull market is you've got to back fundamentals, not hype. And this is the most common mistake crypto investors make. A lot of people call it FOMO, fear of missing out. There's going to be all sorts of new investment opportunities. All right, hundreds, possibly thousands. I mean, we're getting up near the 3,000 mark in coins on CoinMarketCap. So there's going to be tons of places to park your money, okay? What you've got to decide is what select places can I put my money in to get the most return out of versus the amount of risk I take on, okay? So all crypto is risky. Put that out there. If you want a safe investment, the safest investment out there is a long-term treasury bond from our U.S. government, okay? So, when I say risky, I'm talking terms of crypto risky. It's already very, very risky, okay? Very, very risky. That's why I always advise investors, only put in money you could afford to lose. If it was all to go to zero tomorrow, right, you would not be financially burdened through losing that money. And of course, as always, don't take investment advice from strangers on the internet, even someone as smart when it comes to investing as me. Right. But anyways, only put in money you can afford to lose, but don't fall into the FOMO, okay? And there's going to see a lot of stuff coming out. My last episode of this podcast, I talked about ICOs and IEOs and how they prey upon people who buy in the FOMO, and they leave them hanging 99% of the time to the foot of bill, and basically they get all the tokens get dumped on them from early investors who bought them at a significantly lower price, and then basically return 2 to 3 times their amount of money because of the later investors that jump in these IEOs. So FOMO is going to be outrageous during the bull market. Stick to the fundamentals. What stuff is most likely to return value over the long term? Number one being Bitcoin. Okay, Bitcoin is proven to be sound money, more sound than any sort of federal currency out there in the entire globe. All right, that's a very safe bet. Okay, if you don't believe the price of Bitcoin is going to jump up significantly, you really need to redefine your investment strategy in crypto. So I always advise you need to have some exposure to Bitcoin. Another thing I advise on, like I said, this is not true investment advice. I'm just some stranger on the internet, all right? But in my next opinion, I think everyone should have some exposure to Ethereum, okay? Ethereum is not money like Bitcoin. And I get into this argument with people all the time. And leave me a comment if you want to argue about this. Ethereum is a currency on one of the most quickly growing networks in the world, one of the most quickly growing online networks in the world. A lot of stuff is being integrated from Ethereum into the new WW3 web. Okay, so I think Ethereum is going to be a very valuable asset, very, very, very valuable asset. But it's not sound money like Bitcoin. They are going to go through a transition where they go from proof of work to proof of stake, and that's going to be interesting to see how that plays out. I'm excited for it. I think it's going to work out. But you're taking on a little bit more risk with Ethereum. But I think every crypto investor should have exposure to those, because those are probably the two most likely cryptos, okay, the return value over the long term. Okay, so if you give some exposure to that, perhaps even 40, 50% of your entire crypto holding, which me personally, I have more than that, okay, in those two coins. But that'll reduce a lot of your risk, and then you can take whatever's left over, maybe 50, 30, 40% of your other assets, and put them into some more risky cryptos. Okay, I prefer to stick to a lot of the big cap cryptos out there. You know, XLM. I do have some stake in Tron, stuff like that. But these are going to be less risky than other stuff like IEOs. Now, if you want to take some of your money and put it in IEO, that's okay. But you've got to be able to withstand the tremendous amount of FOMO that's going to be out there, and don't buy into the hype, because a lot of these, I'm not saying they're all scams, but a lot of these projects do a great job of doing is getting people to think that it's going to be so much more valuable by just building up all this hype on social media. And you'll be able to start recognizing, you'll start seeing the return of not ICO advisors, but IEO advisors, and they're going to be shilling the freaking crap out of new fundraising projects in new cryptos. And so don't buy into that FOMO, okay? Know where the fundamentals are. The coins that have been around for years and have a tremendous backing by not only people who've invested money into it, but by developers who are constantly using it to build stuff, and then their use case, okay? And the number one thing I always look at when I investigate a new investment opportunity in crypto is I don't give a damn about what your blockchain can do when it comes to investing. The only thing I care about is that token set up so that economically it's going to return value on my investment. And I think investors screw this up so much, it almost makes me want to throw up, because they come at me all the time when I tell them that investment's worthless because of how that token's set up inside that token economy, okay? You don't own a stake in a blockchain company. So just because they have a revolutionary idea that may be associated with some sort of crypto that they've created, that doesn't guarantee that it's going to be valuable over the long term. A lot of people got mad at me for saying the BAT token. I think how that token's economics is set up, I don't think it's worth investing. People putting in money to the BAT token, they're giving out to people for free for just watching a few seconds, some advertisement. I never like to invest in money in something that's given out to free, something that's given out to people for absolutely nothing. And so this is my point right here. I don't think the token's set up very significant. Now, a lot of people come at me and say, hey, Brave is going to be a revolutionary web browser. I got that. I totally agree with that, okay? But BAT, all right, doesn't, just because Brave is successful doesn't guarantee BAT's going to be successful. They're two separate things right there. Brave on its own could be wildly successful, and BAT may or may not see success from it. Okay, you got to separate those two entities, and that's the first thing I do when I read the white paper, and I love reading white papers because I go directly to that token economics, how the token's allocated, and I've got a piece up right there. Okay, this token is going to increase in value because of this reason right here. And I'll give you an example. Bitcoin's going to increase in value because people can use it as sound money that they can transfer around the world without a third-party intermediary, okay? And there's a fixed supply that no one can change. So over time, that limited supply of Bitcoin, because it's valuable and acts like money, you're going to see a significant increase in value because as more people hold on to Bitcoin, it decreases the supply that people can buy. Anytime you got an increase in demand and you got a decrease in supply, that's going to drive up the price. Right there. That's a token, that's an economic system that'll prove the price of Bitcoin is going to increase. Okay, I got one for Ethereum. Ethereum's a network that lets developers create all sorts of applications on there for low, minimal cost. It's permissionless, and they can front load the cost of running their apps onto the users. And it's also going to be huge for the financial institutions because they're going to be able to create smart contract systems. So Ethereum's a token, all right, that acts as a currency on that network, and as that usage increases, like we've seen before, especially in 2017, that's going to drive the price up. So right there, I was able to give you two ways those two different cryptos are going to increase in value. So when I look at an investment, okay, I look at, all right, how is this coin going to increase in value over the long term? And if I can't come up with a reasonable answer based on what is said in the white paper, it's not a good investment in my opinion. Okay, there's better places I can park your money, and that's what it comes back to. There's so many places you can park your money. What's going to be the most valuable investment to do so? And so you've got to look at the fundamentals. If you invest in a coin and you haven't read the white paper, okay, you're wrong for investing in it. You're wrong. Now, don't believe everything in the white paper because white papers do a good job of making this thing seem like it's nice, button up, all right, seems great. And then the project rolls out and we see the actual details and it's a bunch of donkey doo-doo, all right? So be careful with white papers, but it's a great place to start. I tell you, I don't read anything on that white paper until I look at that token economics and I try to determine for myself, okay, is this token set up so that there's a possibility of having a good return on my investment? And if so, I read the rest of that document. Okay, that's a great way to skim through white papers because a lot of them are garbage and you can throw them in the trash where they belong. But you need to look at that white paper, and then after you read that white paper, you start investigating, okay, what's the team like? Are they actually, can I trust them? Are they able to do what they're saying is going to be done? All right, so look at the fundamentals. Don't base it off hype. Come on, man, be smarter than basing this stuff off hype. All right, it's your hard-earned money. If you want to throw money into something without even looking at it, Bitcoin, Ethereum, hard to go wrong with those. All right. Whoo, man. I need a drink of water after that rant. But hey, I do this for you guys, all right? So feel free to leave me a tip. I'll just reinvest it in this show. I mean, I'm only helping you out, so, feel free. But I'm just kidding. I don't care. You can leave me money or not. I take Bitcoin, Ethereum, all the top major cryptos. I post my wallet address. All right, so my next piece of information I want to share with you. Don't drink the Kool-Aid. Okay, I coached football for 6 years, all right? Played for even longer, all right? And one thing you had to be very, very careful as a football coach is you don't let your players drink the Kool-Aid. After 1 or 2 wins, all right, we were the best team in the entire state of Texas, all right? And then the week after that, we'd get our ass whooped, right? Don't drink the Kool-Aid with cryptos. They're going to have weeks where they take off, right? This new coin that came out, man, everyone's jumping in there. That thing's going to take off. Be smart. Don't be the guy that buys it at the top. When the bull market hits, all right, a lot of times cryptos, when they hit, right after they hit the exchange, okay, you're going to see them plummet, especially new like ICOs and IOs, because like I said before, early investors are dumping their, cheaper bot tokens on later investors who bought them at a higher price. So you've got to avoid that FOMO. Don't buy it at the top. If you're unsure, just, relax a little bit. Give it a couple weeks. If you like the investment 2 weeks ago, you'll like it 2 weeks later. Okay. If you want somewhere else to park your money to hopefully increase in value over that time, like I keep saying, Bitcoin is just a great option for you. All right. It drives me crazy, these anti-Bitcoin crypto investors. Okay. If you're not day trading and you're investing for the long term, you don't have exposure to Bitcoin. That's foolishness to me. It blows my mind. People are that crazy. All right. So don't drink that KoolAid. Don't get your ass whooped when that thing comes to the top. All right. So the next part about understanding the bull market, all right, what goes up must come down. If you look at every major bull run in crypto, you see a massive spike followed by a massive decline, okay? Usually not past the point where it first took off from, all right? So if you kind of take out those major swings, the price of Bitcoin really has risen gradually over time, but it's like a damn mountain. It goes up and down, up and down, up and down. So you need to develop an exit plan, okay? At what price are you going to sell and get out of your position? Now, this is easier said than done, because there's a lot of people when Bitcoin hit 20 grand, and I don't care what they say, a majority of people didn't sell their Bitcoin, okay? That thing was at its all-time high, and a lot of people thought it was going to $1 million. Okay, I know that sounds crazy, but I mean, you would be surprised at how bad people are at math when it comes to investing. So they were saying $1 million valuations, man, $100,000 valuations, and that thing dipped hard. All right, so you got to have an exit strategy. All right, my exit strategy is when I see that dang mountain peak again, and I start seeing, there's no way it's going to go down, and everybody's jumping in the bandwagon, all right? I'm going to sell my assets off. Maybe not 100%, but I'm going to take profits, and that's what you have to do as an investor. Now, if you invest in a stock that doesn't pay a dividend, okay, at some point in time, you have to sell that stock off for you to make a profit. And that's one big assumption a lot of investors make. You haven't made any money until you sell that crypto, all right, and trade it in for fiat or something that is the same as money. And most cryptos are not money, okay? Bitcoin I'll call money, but other cryptos, not money, all right? So you haven't made a dime until you sold that crypto off and got that value back in as some sort of fiat or some other money equivalent like Bitcoin or some other asset like that, all right? So people always say, yeah, I made 10 times the amount of money, but they're still holding that same coin that just pumped 10 times. You don't own anything because that thing could quickly shoot back down just as it shot up. So you've got to take profits. Okay, you've got to understand the price of these assets don't just continuously keep going up and up and up and up. All right, eventually they got to come back down, and so you need to come up with an exit point. I'll go and tell you, if Bitcoin does get up to where I think it's going to get up in the next couple of years, I think it's going to shoot up near, above 50 grand, could go as high as 75. Some people claim 100,000. I'll have to do some more math on that, see how much money could potentially flow into the market cap to get the price to be up to that point. But that's where I would sell out. Okay, like I said, not 100%, probably, offload 3/4 of my holding, because the price won't go up forever. And it's so hard because that FOMO sneaks back up on you like, well, what if I sell at 50K and it goes up to 250K? Okay? But you got to look at it, right? What if it goes back down? You're going to risk not taking profits when you could have had so much more money that you'd be able to do so many things with, like reinvest it in the other assets, maybe even go outside the crypto market, in real estate, stock market, bonds, something, buy some dividend stocks, whatever that may be. Right? You've got to take profits, so come up with an exit plan. Okay, and one thing I'm going to do is I'll develop an exit plan and I'll post it to my website, on my Twitter account, talking about, how to develop a right exit plan and how to stay disciplined and make sure you get out at the right time so that you don't become a crypto millionaire, and become crypto bankrupt all within a 1 year period, because it's going to happen. Okay, especially, all right, once that price of Bitcoin, shoots back up to the 20K mark and everybody's, Bitcoin, let's go. All right, when your grandma starts investing in Bitcoin and she knows nothing about it, that may be the time to sell. All right, so be ready for it. These are very exciting times. I can't wait for this bull market to take off, because it's just no greater feeling than just returning, 10, 20 times on an investment. And there's no better way to explain it. It's like an addictive drug, because those hormones get released in your brain from making all that money off an investment. And you become addicted to making money. You become addicted to investing. So I know it's hard to sell, right, but you got to have that exit plan. You got to be ready for that market to make swings. Always make sure you're checking out the news, because you never know what the governments are going to do. And if they were to come out and try to ban cryptos, that would make the price shoot back down. So it's an exciting time. I'm glad to be in it. Lots of things going to go on to make this price jump up. The halving is getting close to a year away. And usually in that range, the price starts shooting up. But now in this next bull market, we got different investing organizations that are going to allow so much access to cryptos, to like Fidelity, TD Ameritrade, like I said before. It'll only be a matter of time for banks start shilling Bitcoin to the customers. They're going to rip them off on that case, but it's going to happen. Bitcoin ETF gets approved. Ethereum futures are close to getting approved. Ethereum ETF's got to be around the corner sometime. And these are truly exciting times. I just can't wait for this thing to take off. Well, that's been our show. Make sure you subscribe to my channel. Make sure you share this with their friends and family so that they can learn, how to handle the bull market. Make sure you check out my website at crusader.com/BlockNation. Make sure you follow me on Twitter at Drew Griffin, and leave me your feedback and comments. I want to know what you got to say about this show. Like it, hate it. Let's hear from you. Thanks for watching.